Good day everyone. My name is ZULAIKHA binti Abdul Karim, a newly appointed account executive of Fourb Plantation Berhad. I have a 3 years working experience in the industry and hopefully I can apply everything that I learned before to perform better in this company. Thank you.
Hi, my name is AINA binti AZIZUDDin. Before, I have worked for other companies for 2 years, but now I work at Fourb Plantation Berhad as a new account executive.
Hi, Assalamualaikum. My name is IMAN ZULAIKHA binti ALMARZUKI. I am a new accounts executive of Sime Darby company.
Assalamualaikum warahmatullahi wabarakatuh. My name is SHARIFAH RAMIZAH binti HAMZAH and I am the newly appointed accounts executive of Fourb Plantation Berhad.
The first part of the presentation is about Mfrs 8 segmental reporting, and I will start with the company background. The date of commencement for Fourb Plantation Berhad is on 1st of July. The main business for this company is in plantation, but it also has business in other sectors such as industrial equipment, automotive, logistics, and healthcare. It was founded by Dato' Azmi American and was established in Malaysia on year 1970 and was incorporated in year 1971. It also set up its head office in Jakarta in the same year. The latest awards and achievements by Fourb Plantation Berhad are Most Innovative Approach to Driving Culture Change Award received on 21st January 2019, Sustainable Business Award received on 29 January 2019, and also Europa Awards for Sustainability received on 28 November 2019. The company's mission are committed to developing a winning portfolio of sustainable business and to deliver superior financial returns through operational excellence and high performance standards. And the vision is to be a leading multinational corporation delivering sustainable value to all stakeholders. The objective of Fourb Plantation Berhad is to promote integrity, transparency, accountability, and responsiveness. Next is management approach on factor to consider having a segment reporting. There are 3 factors. First, the nature of the business. Second, nature of the production process. And the last factor is existence of managers responsible for the activities. For the first factor, it is identified by any activity carried out by an entity with the main objective of profit maximization. For the second factor, it involved in the manufacturing and distribution of oils and fats products, oleochemicals, and palm oil-based biodiesel, as well as fast-moving consumer goods. For the third factor, each segment is controlled by the segment manager, who are responsible for ensuring the performance of the segment and making direct contact with the Chief Operating Decision Maker, also known as CODM. Moving on, there are 5 types of segment in Fourb Plantation Berhad, which are plantation, industrial equipment, automotive, logistics, and healthcare. The next part is recognizing Chief of Decision Making (CODM) and its responsibilities. For this company, the Chief of Decision Making is the Board of Directors. CODM are responsible to make strategic decisions about allocation of resources, assessing the performance of the entity's business units, and other business matters.
The process to identify whether it is reportable or non-reportable segment. For the first step, we'll be using quantitative 10% threshold test. So, we choose to do the test by using the total revenue. Total revenue is the external plus internal revenue. So, to be the reportable segments, the total revenue have to be more than or equal to 10% of combined revenue of all operating segments. If it does not meet the 10% requirement, so it will be disclosed under all other segment categories, which is non-reportable segment. 4 of the segments, plantation, industrial equipment, automotive, and logistics, they meet the 10%. So they are reportable segments. While for the healthcare, it does not meet the 10% requirement because it is less than 10%. So it is a non-reportable segment. There are 4 reportable segments and 1 non-reportable segment.
Another process to identify the segment is by using the 75% threshold test. This test is applicable to revenue basis only. If the total external revenue is less or equal to 75%, the additional reporting segments will be identified as reportable segments. But if total external revenue is more or equal to 75%, non-reportable segment is included in operating segment.
Next, this is a new segmental report that we have allocated the segment according to reportable and non-reportable segment. In conclusion, segment report have their advantages and disadvantages. Advantages of segment report. The first advantage is transparency, better insight. For the report segment, we can be better evaluate the sustainability and the growth of the company, and also can monitor the performance of the management. Second, better predictor of profitability. So, reporting segment, it enables the user of the financial statements to be able to predict the future of the profitability of an organization, where particularly when the segment are involved in diverse activities. Last, which is the third advantages, the segment report can lower the cost of capital. Lower cost of capital will decrease the risk. So, the reporting segment, it will discloses complete information. So the risk for investment in an equity of company that discloses complete information is lower than the risk of investment in an equity of company that withholds information. Next is the disadvantages of segment report. The first disadvantages of segment report is emphasized in the present. As we know, segment report is reported not full year. It can be whether half year or quarterly, so it will be more focused on the short-term numbers. Second disadvantages of segment report is data manipulation. Segment report can be manipulated via data if the information is being reported through management's eyes styles. And also the data can be selected in particular situation, and then to be pinned in a better performance to send desired message to the stakeholders.
Moving on to the next part, which is part B, MFRS 134 interim reporting. The public listed company that has been chosen by our group is Sime Darby Berhad. This part will consist of reports on the interim reporting for Sime Darby Berhad, and it will be presented by me, Sharifah Ramizah binti Syed HAMZAH, and also AINA NAJIHAH binti AZIZUDDin.
Next, for the basis preparation of the interim report by Sime Darby prepared their interim report quarterly, and according to MFRS 134, interim financial reporting, Sime Darby adopts a discrete method as a basis preparation of the interim report. Each interim report should be considered as a separate accounting period from annual cycle. Interim report should be used to predict and describe the financial position and financial performance for the discrete period, which may be a segment of the annual period. The revenue and expenses item has to be measured and recognized in the same way that annual financial statements are prepared as per discrete method.
One of the accounting policies that is being used in preparing the interim report of Sime Darby Berhad is MFRS 138, which is intangible assets. These intangible assets are carried at cost less accumulated amortization and accumulated impairment losses. The amortization is calculated using the straight line basis over their estimated useful life, and it commences from the date of commercial production of the product to which the development cost relates, or when the intangible assets are ready to use. Provided on the right side of the slide is the table for the principal annual amortization rate for the intangible assets of Sime Darby. Firstly, we have computer software, which rates at 10% to 33%, and then we have trademarks, which is at 5% to 20%, customer relationship at 10%, and lastly, development cost that is calculated over the period of the expected benefit, but not exceeding a period of 5 years. The next policy is MFRS 102, which is inventories. Inventories are stated at the lower of cost and net realizable value. The cost of inventories are determined principally by the two following methods. The first method is specific identification basis, and the second one is weighted average basis. These methods are being categorized accordingly according to the category of the inventories. Next, net realizable value is the estimated selling price in the ordinary cost of the business less the cost to completion and the selling expenses. Meanwhile, demonstration vehicles are classified as inventories as they are readily available for sale and are generally being sold within a year.
Next, the types of interim report prepared by the company. Sime Darby Berhad prepare a condensed set of report. There are 5 financial statements prepared by Sime Darby Berhad. The first one is unaudited condensed consolidated statement of profit or loss. The second one is unaudited condensed consolidated statement of other comprehensive income. The third one is unaudited condensed consolidated statement of financial position. The fourth one is unaudited condensed consolidated statement of changes in equity. And the last one is unaudited condensed consolidated statement of cash flow.
Moving on, we have period for the current and comparative for each of the statement being prepared by Sime Darby Berhad. First of all, we have 4 types of statement. Statement of financial position, statement of profit or loss and other comprehensive income, statement of changes in equity, and lastly, statement of cash flow. The current and comparative periods for each of the statement being prepared by the company Sime Darby Berhad is prepared according to MFRS 134 interim reporting, and it will be measured from the 1st of April 2021 until the 30th of June 2021, which is equivalent to the 4th interim quarter of the company. An important note to be taken is that the financial year end for Sime Darby Berhad is on the 30th of June every year. So firstly, we have the statement of financial position, and the current interim reporting period is 3 months that starts on the 1st of April 2021 until the 30th of June 2021. Meanwhile, the comparative period will be 12 months, which is equal to 1 year. It starts on the 1st of July 2019 until the 30th of June 2020. And the next statement would be statement of profit or loss and other comprehensive income. The current interim reporting period will be 3 months, starts from the 1st of April until the 30th of June 2021. And the cumulative year to date is 12 months, that start on the 1st of July 2020 until 30th of June 2021. And then we have the comparative year for the current interim, which is for the period of 3 months. It starts on the 1st of April 2020 until the 30th of June 2020. And then the comparative year for the year to date is at 12 months, and it starts on the 1st of July 2019 until 30th of June 2020. Now we're down to the last 2 statement, which is statement of changes in equity and also statement of cash flow. For the cumulative reporting period for both of the statement is at 12 months, that starts on the 1st of July 2020 and it ends on the financial year end, which is at 30th of June 2021. Also, for the comparative reporting period is also at 12 months, which starts on the 1st of July 2020 and also ends at the financial year end of Sime Darby Berhad, which is on the 30th of June 2021.
So, for the adjustment, the first adjustment is intangible asset. On 30 June 2021, Sime Darby Berhad has an intangible asset of 1,629,000. During the period, the company has recognized an 1,500,000 ringgit of research costs during the years. The intangible asset value at 30 June 2021 was 1,120,000 ringgit. Regarding the adjustment of the intangible asset, the research cost cannot be capitalized as an intangible asset since the future economic benefits of the research cost cannot be expected. So, the cost will be expensed off to statement of profit or loss and it will cause an increase in administrative expense by 500,000 ringgit. The carrying value of intangible asset as at 30 June 2021 are 1,129,000 ringgit after deducting the research cost of 500,000 ringgit. The carrying value of intangible asset should be compared with the fair value amount of 1,120,000 ringgit and will result in the loss of fair value changes of intangible asset of 9,000 ringgit. The amount of fair value of 1,120,000 ringgit should be recognized in the statement of the financial position. Next, the second adjustment is inventories. On 30 June 2021, Sime Darby Berhad has an estimated inventories of 8,316,000 ringgit. Every year, the value of the inventory will change. But the company discovered that the net realizable value for inventories on 30 June 2021 is 8,200,000 ringgit. Regarding the adjustment of the inventories, on 30 June 2021, the company has an estimated inventories of 8,316,000 ringgit. Meanwhile, the net realizable value is at 8,200,000 ringgit. The company should record the amount of inventories at the lower of between the cost and the net realizable value. Therefore, the amount of inventories to be recorded in the statement of financial position is at 8,200,000 ringgit. Next, the loss of inventories of 116,000 ringgit after comparing between the cost and net realizable value should be recognized in the statement of the profit or loss. So, for the last one is the extract of the financial statement, and this shows the extract of the statement of financial position for Sime Darby Berhad after the adjustment, and it shows the values of the non-current asset of intangible asset and current asset of inventory between the current period of 30 June 2021 and the comparative period for the same quarter as at 30 June 2020.